The Bear Roars special edition series, Bandwidth, serves as a platform to celebrate the people and stories of Dan's book. Bandwidth, the untold story of ambition, deception, and innovation that shaped the internet age and the dot-com boom. The story covers the epic journey of the creation of the internet's backbone, the building of the early competitive fiber networks in the 1990s, the bandwidth boom, bust, and resurrection ending in 2020 when Dan's company Zayo was sold. The book is available on Amazon and Barnes & Noble. Head to dan-caruso.com/book for more details. In this episode of The Bear Roars, Dan Caruso sits down with longtime banker and dealmaker Horace Zona for a candid look inside telecom's wild ride, spanning market meltdowns, boardroom battles, and the deals that reshaped digital infrastructure. Horace reflects on his front row seat to iconic transactions, from AboveNet and RCN to Zayo's rise, and the lessons learned in navigating both boom years and financial crises. He shares how trust, discipline, and relentless curiosity became his tools for deal-making, why price discovery is both art and science, and how today's frontier in AI, quantum, and robotics feels like déjà vu from the 1990s. It's a conversation that blends war stories, strategy, and foresight into the future of digital infrastructure. Let's poke the bear to kick off the conversation.
Horace Zona.
Dan the man.
I know exactly where I want to start this one.
Oh my God. I feel like this is a setup, but okay.
It's not a setup.
All right.
How many of the company names that were mentioned in Bandwidth, whether or not you read Bandwidth, doesn't matter, that were you involved with on the buy side, on the sell side, maybe on the potential buyer side who wasn't successful?
Oh, yeah.
Start rattling them off.
Oh.
Because there has to be a ton of them.
Oh, my God. I there's no way I'm going to remember all the names. I would just say, though, that...
Well, give us... Because you get past 20 really quick. So just start rattling them off.
Well, I mean, some of the things that I think were... that I remember, like, more than others, right? AboveNet... obviously is kind of at the top of the list.
Right.
And the whole 360.
Okay, wait, let me say one thing before you go any further. You're the first banker, the first investment advisor that's been on here. We've had analysts, we've had private equity guys.
Yeah, I know. John was on. Yeah.
But you're the first one who's really been in the buy-sell mode. And so this could be special in that sense. That's why I'm so excited.
It was a very special time.
And you were involved in so many of the transactions. So, okay, go with what you're about to say.
Well, I was just going to say, I remember that AboveNet time so well for a number of different vectors, right? I mean, if you go back to, I go back to like meeting Bill or Perch after we had been, getting going and doing a bunch of things when we took, oh my goodness. Okay. We helped Abry take the cable company private.
Sedera?
We ended up splitting it into, we got Sedera.
Yeah.
And so I then met Bill, basically, cold calling him. And I remember reading like his financial reports, and he was really, really downplaying dark fiber. Like it was part of their past. I mean, they had gone back to some of the old days, the bad practices, right?
And they were really the inventors of dark fiber as a product.
Right.
Steve
Garfello. Yeah. And so everything you and I had talked about early on was about lit. And so a few conversations I had with Bill, I'm like, God, the economics here are even better than lit. Like this is, and then it was the whole, light bulb. Like this is almost tower-like in terms of the type of economics and the business model and such. So, of course, roll that forward, right? We helped Bill a little bit in terms of setting up, and giving them some growth capital. And then
this is roughly what year do you think?
I would say this is probably 14 or so, maybe 13. Because he wanted to do acquisitions, as you know.
Yeah. Well, we probably bought him in 2012 or 2013. So it must have been
11, 12 then, right? And I should have probably done more of my history homework here. But I remember the famous Metro Connect, right? When you put down your wallet. I only heard about it because we were just doing back-to-back meetings during that type of stuff.
When you heard about it, how was it described?
Oh, I thought, well, of course it was like, Dan stole the show again. And here he goes. He's got a big checkbook. And, I had seen you raising capital, right? Of course, it was your first set with MC in Columbia and doing great. But then when you brought Charlesbank on, that was amazing because, you flipped the switch on that acquisition to go private. And again, another name I can't remember. What was that? It was a small public company.
Oh, the one, FiberNet.
Yeah. And was that John DeLuca?
John DeLuca, yeah.
And so I remember.
I think it was FiberNet. I think FiberNet was named.
And so I remember.
Every company was called FiberNet back in that day.
But when I was working with Ken, on the numbers, I'm like, holy cow, this is just amazing. And then we really, that's when the triple light bulb went on in terms of how you could flip the switch and achieve synergies and really make that new capital, come in at a effectively much lower basis. And so that was when we kind of said, okay, if Dan and the team aren't going to hire us on the on the buy side, we got to go, double down in marketing on the sell side.
I always wanted to hire you guys right out of the gate. It was Ken that was getting in the way of that. Just so
oh my goodness! Get him on the phone right now. All right, wait. We're gonna call him. I seem to remember Ken pointing his fingers back towards you a few times.
That's the old
Ken. But listen, I'll even bring up another thing. I remember actually it was a first and last kind of buy side opportunity, and it was very early on where we did the diligence trip together on XO.
Okay.
And that was when Carl had owned controlled the company. And we had the Jeffries guys saying that they had all these ins to Carl, which I don't know, never seemed to come around. But that's when I really saw you in action too, right? From a diligence point of view, kind of moving the chess pieces around, and that's how we got really excited. Yeah. We got really excited about the business model. Which, by the way, let's take that back, right? We could spend, 20 minutes on essentially the recreation of a business model, right? And you had come off of IGC and had that.
Am I paying you to be on here?
Well, I
getting a little too flattering.
I have done some reflection. Listen, we were going to do this back in February,
yep.
Right? And then you didn't come down to Florida, so I've been looking forward to this time.
I didn't come to Florida because I think, I was just coming out with a book and we contacted Metro Connect and they said, well, there's this panel on the third day at 4:00 and you could be the fifth person on the panel. I'm like, dudes, I don't go to Metro Connect to be on some silly panel at the end of the last day.
Right. No, it was actually, we missed you. That was a very good conference. But heading back, so, the XO, that first XO deal that was really, it never happened, right?
Yes.
Okay, yes.
Shall I open this?
We got to open it. This is
a gift from Horace.
This is a gift in celebration of all things bandwidth.
All right.
I don't know if that's going to, if we have to, get
Oh, there you go.
Okay, super.
Just need to do this first. My younger days, I wouldn't have had to.
You just tear it off with your teeth.
That's right. All right, keep going.
Okay. So XO doesn't happen, but you then with the company go on a tear, right? You're buying private companies out of from sponsors. Here we go. You're buying subsidiaries out of utilities. Remember that, right? The first piece of paper, was with the Pennsylvania utility.
Cheers. Thank you for coming by and doing this.
Literally more than a decade of fun.
Yes.
Right? Almost, it was halfway through the second. All right. Cheers to you.
Cheers. Cheers to you.
That stuff is great. Ooh. Little shout out to Willett.
You want to tell us a little bit about it?
Oh, it's just a really great bourbon. And I thought I was looking for something local here, but I really don't have the expertise. So, Kentucky's Kentucky.
All right. Well, thank you.
Okay, so back to some fun thoughts. So you take the company private, you bring in Charlesbank, and they go from to me, it was like a fun. Did they come in at a 12 times multiple? But then post acquisition, it was 6. It was amazing, right? And then
and kudos to them because when Charlesbank came in, it was 2009.
Yeah,
and so maybe in 2008 still. And so we were, in the throes of the Great Recession, and it took enormous conviction on their part to say, this is when you place a contrarian bet, and we think that what you're doing makes sense.
Did Michael find you, or did you find Michael?
Well, this is a good lesson for anyone who's younger listening to this, and you've always been really good at this. Is you build relationships when you don't need relationships, and so back when I was still doing ICG, I would visit Boston to see Gillis and others, and I would see who else there was to see, and reached out and connected with Michael, and Michael took the meeting, and we went out for a really nice breakfast, and we hit it off, and we said, well, there's really nothing to do together here, but you never know in the future. And the never know in the future turned into kind of ongoing conversations. And when 2008, 2009 hit, he said, I think that if we give you money now, the buying opportunities you're going to have in this great recession environment are going to be like no other. And we want to fund that. And we were able to work out a deal, and it worked tremendously well for them. I'm sure they made at least 11 times their money back. Right. The A guys made more than that, but Charlesbank made a ton of money.
Well, right. Too. They were still in super early. I mean, you had probably, I'm going to guess, done only like 5 or 6 acquisitions by that point in time.
Yep. Maybe less.
And God, I just had this flashback to the Louisville office and the fire escape.
Yeah, because everyone would have to enter and exit walking up a fire escape.
Well, I mean, the joke in the firm was, was this part of their business plan?
The fire escape?
Yeah, like, they've got like this exit ramp like that no other company, ever had in their past. So it was actually, I remember going up the first time by myself and then brought the whole team, and everybody was like, you're kidding me, right? Insert your swear word in front of kidding. But, we had a great group of folks. We had Todd Cucci, who's now CFO of Cable One, Christoph Straven, who's North American CFO of Vantage, Yvonne Boss, who was our credit partner, who was instrumental in kind of taking up this new idea, right? This because everybody was, so I did remember, we took our RCN private. With Abry, so with Jay Grossman.
That's what Sedera
right, and then Sedera, right, we split out Sedera to be the fiber business. Mike Sicoli was CEO.
Great guy.
And he just was at the conference this past week as well, doing wonderful things with DQE. But the challenge, right, was trying to convince the market that your enterprise commercial fiber business wasn't a CLEC. Because, of course, that was a 4-letter word.
Yeah, C-letter word. Bad 4-letter word.
And
for good reason, it was a bad 4-letter word.
It was a bad letter word for very good reasons, right? And because that was like late 90s, early 2000s implosion. And yet it really took that 5 or 6 years.
More than that even.
Right? Well, I'm saying, the shit hit the fan in that 2001, 2002 time frame. Yeah. And then, you don't come out of it until 2009, right?
So 8 years.
And from a debt investor point of view, whether it was senior or the high yield guys, they had just that old concept in their head, right? And all of the fiber trade bullshit too, on top of the CLEC stuff. And so you really developed a plan and set a market because of your discipline. Right, in terms of how you'd allocate capital, we really could model it alongside of you, and understanding your returns on investment, and then the stickiness of the customer. So we had to educate that market, right? When we were, it's so funny when we, because cable actually had to go through a renaissance as well in that 2008, 2009 timeframe, and we were thinking that. Ultimately, what was going to be easier to lever, what was going to be harder to lever, and we got surprised, right? And so,
surprised in what way?
Well, because the leverage we were able to season the market with was actually just as attainable on the fiber side as it was on cable.
Yeah. Whereas if you went back a couple of years, because of all the throes of the meltdown. You would have been trouble getting 3x leverage on.
Well, we underwrote, the go private for RCN with that tilt, towards cable, and we actually got more of a parity,
Gotcha.
between the two businesses.
And would you have underwrote it, what, for debt, like 4.5, 5, or?
I'd say
Remember?
it was probably in that 4 times range.
Okay.
And then we were leaning obviously with cable, probably in the 5 times range, if not a little bit higher, maybe 5.5. If it's kind of funny. I'm sure when Christoph and Todd hear this, they'll be laughing at me. But those were challenging days. But that was $1.2 billion go private. But that gave us confidence in like trying to help you raise money on the debt side, which you guys were great partners with all the time.
Ken was a machine at the debt side, especially. I mean, he had some kind of intuitive feel for it, the relationship building. I mean, he was such a valuable kind of
he was
asset for us.
He gave us some compliments when others would knock on the door and throw arrows at us. But Ken genuinely also was so easy to work with. Mm-hmm. He was anti-prima donna, very straightforward,
yep.
But not in a harsh way, right? It was like, here's what I want to accomplish, and I consider you my partner, and let's try to do it. And that puts you in a much better mindset to try to deliver, and thankfully we did, right? So many different ways. But I guess when I roll forward, working with Bill at AboveNet, working with you. There was the fateful 360 deal that came along, to throw out another name. And I don't know if you remember this, but this really was like, I look back at it as a really funny situation. But do you remember a dinner that we had at Frasca about this when this was all going down?
No, remind me. So set the context.
So here's the context. So 360 Networks, right? That
which is Greg Maffei
was selling.
CEO, yeah.
Greg. He's selling. I think RBC is the advisor on it, right? Dave Parker, who became one of my partners.
RBC is advising 360.
Advising 360.
Yep.
You're off trying to buy it. Of course, as usual, you don't have an advisor. And Bill is doing his best to buy something. And we're like, Bill, we're here to help you. And so we link up with Bill. And, his board is just, still hesitant, right? Because they have that bankruptcy in the back of their mind. They're still a public company. And we're like, Bill, here's more money. Here's more money. And, ultimately, at this dinner, you're like, Horace, you're costing me $25 million a pop. Stand down. I'm like, Dan, what do you, I mean, I'm serving my client, right? I mean, I'm doing my job as a banker.
I hope I was ordering some pretty expensive wine then.
I pretty much remember I was walking in thinking I was paying, but we got a little heated. And you're like, you bankers, you're just, you're arms dealers, you got no loyalty and blah, blah. I'm like, I've got loyalty to my client. I mean, you could have hired me.
Gosh, that sounds like me saying that stuff.
And it got, you were on a roll. And Ken's at the meeting. He's just like watching the ping pong going back and forth. And I said, Dan.
Ken would like when I would entertain him.
I just got to a point, I'm like, Dan, this dinner could go one way or the other. It could go left. It could go right. We can agree to disagree and have a really nice dinner. Or if we're not going to agree to disagree, I'm walking out of here and I'm not sure where our relationship is. And
you said that to dinner?
I did. I was like, listen, I mean, you kind of were having fun going after me a fair bit. And so I just like, all right, enough is enough. Right? Come on, this is just basic stuff, right?
Yeah. So what did I do?
Well, no, you kind of backed down a little bit, and we had a nice dinner. I don't think Bobby was there that night, but it was. I remember exactly that table. As you're looking at the back left of the restaurant.
That's why Ken was kicking me under the table. Gosh,
it was. Those are fun times.
Yeah.
Like I said, I look back at that with. Listen, we respected everything you guys were doing. Of course, our hope was that you were respecting what we were doing. And at the end of the day, you won. You paid what it took for 360 and you got the asset.
Yeah. And for those listening in, I'll reveal one of my silly negotiation secrets. And it is to be orthodox. It is to kind of throw a curveball, to sound like you don't know what you're talking about on some things and just kind of get the person in a position where they feel like they have to say something. And then you kind of learn stuff. Maybe you learn stuff, maybe you don't. But
I know I know who you've done that to more than a few times.
Who's that?
FPL.
Oh, FPL. Well, Carmen was a good.
Carmen, that was a famous one, right?
And I did some, I did some big favors, Carmen. She invited me down to come to Florida because she wanted me to meet her boss. And I said, well, if you want me to meet your boss, why isn't your boss get on a plane and fly to Boulder? Because it sounds like you want me to meet your boss, not because you want to potentially sell your company to me. You want me to meet with your boss so I could help tell him how much more valuable it is than he thinks it is. And she's like, well, I really want you to meet my boss.
Note that, everybody.
Yeah. And she's like, well, he won't come up there and see you, but it would be a big favor to me if you come down and see him. So I'm going to come down to see him, long ways from Boulder to Miami.
Yeah,
and
sell
I
the
know
story.
In helping her in this case, I'm not going to help myself because this is
right, because they actually did a few acquisitions, right?
Yeah, so I went down there anyways. I told him how great the business was anyways. I told him it's worth more than he thinks it's worth anyways. And sure enough, I must have done a good job because she was then able to get support from him to do some deals. Having said that, did some deals they probably shouldn't have done.
Right, that's true. As many did.
Yes.
As several did.
But we were competing heads up for one of those deals, which is probably what you're kind of hinting at.
Yes.
But that's your story to tell.
Well, we were advising on the sell side of a business, and you were actively in the bidding of it, and so were they. And
we say what deal it is or no?
I mean, do we want to? I mean, it's
this
like
is up
statute of limitations.
It's up to you.
Well, I mean, it's
one of my favorite. It's one of my favorite deal stories, but it's in the top 10 for certain.
Yeah, I mean, listen, it's let's just go with Target, right? We're selling Target.
Target Fiber.
Yeah, Target Fiber. And, we've got a really, we started really pushing the level of what we were looking for in terms of a multiple. Of course, you had to have the right business and the right model, had to have the right time for somebody to buy. And, it's so important, right, for us as a sell-side advisor to continue to keep that real tension.
Yeah, the competitive tension.
And as a result, you're really hopeful that the marketplace isn't talking to each other, or they should know that they should not be talking to each other. And most did know that they shouldn't be talking to each other. But I think in this particular situation, Carmen, I guess, did she not think that you were bidding? Like, what for sale sign did you not stop and take a walk around the property?
Yeah, so we, Carmen and I had a relationship. I went down there. We get to know each other over the years. So I consider her a friend. And so she calls me up and says, I need to ask you something. Now, what had happened in the hours before is we reached an agreement to buy this company, Target Fiber, at a price that was ever so slightly higher than the price that she thought she had already agreed to buy it for. So she starts the conversation with, I have a question because I need some advice, on a deal dynamic. But I need to ask you a question first. What's the question? Like, did you sign a deal to buy Target Fiber? So now I'm like, 1,000, 2,000. Because the answer
calculate.
Because the answer was no, we didn't sign it.
Right, you hadn't signed.
No. Was it being routed for signature? Did the other side sign?
Did I think I had the deal in hand?
I know I didn't sign it at that moment in time, but was I pretty certain we were imminently going to sign it? So I'm like, what do you do? Because I would say the wrong answer,
right?
Like, no, we haven't signed a deal, but I think I know what you might be talking about, but we're about to sign it. I can't say that. Nor can I say no comment because that's like saying that. So I'm like, I'm going to answer the question that she asked.
I haven't signed a deal.
No. She's like, well, let me tell you what's happening. I'm like, okay. So she goes on saying, we had this deal locked up. It was, it was completely, agreed upon. And we were about ready to go to signature. And then we get a call and we're told, someone else got the deal. and I want to know what you think I should do about it. And I said, being a good friend of hers, did you have it under exclusivity? And she said, no. I'm like, well, a deal isn't a deal until it's signed.
Exactly.
If you're under exclusivity, that's different. But if you're not under exclusivity and it's not signed, the buyer or the seller has an obligation to get the highest price, especially when you mentioned, because they're part of a public company.
Yep.
And she's like, oh. I was waiting for that dreaded phone call a day or two
exactly.
later, but it never came.
round 3, Dan. Round 3.
I'm not sure she talked to me much more after that.
Yeah. Well,
actually, we remained really good friends and think the world of her.
Hey, listen, it was a fun time.
And it was great. I mean, that was an important deal to us. In hindsight, we should have been, the price that we bought it for, we should have been, wasn't obvious at the time, but we should have been willing to pay materially more. But on a multiple basis, it was definitely in market on a multiple basis, but the quality of the property, that was before even we fully understood kind of what a pure play dark fiber kind of dominant footprint in a given geography should be valued at.
And that's, listen, I would say another thing, again, this is not a Dan Caruso commercial or Zayo commercial. To me, that points out, just given how you had connections and how you operated, how you were always trying to find that, you were price exploring all the time. And that's another version of it, right? Mm-hmm. And your goal, right, is to pay what it took, but not
So when you say price exploring, for the people who are listening in, because I think that is, that's an important takeaway. People
price discovery.
But tell in layman's term, what do you mean when you say those words?
Well, listen, if I'm on the side of the road and I've got some beautiful corn to sell, I don't want to necessarily try to sell it for $5 a cob, and nor do I want to sell it for 5 cents a cob. I want to figure out where I can entice people to come in. Now, you don't really deal with not many situations in sell side are you dealing with volume. Like, we're only selling this business, but we may add that business to juice it up. That does happen, right? But when you're dealing with a single asset, you're really out there for price discovery, right? And that's why we go through multiple rounds, right? And the job as a sell-side advisor is to get as many people interested in with as much quality in terms of their knowledge of the business at a given time, and then you try to level set that, right? Yep. And so, that's why you go through a first, second, and maybe a third and a fourth round.
Yep. And part of what I would do frequently, and I've tried, this is a good lesson for the Caruso Ventures team because, I've been having them do this, but I don't think they fully know why, is price discover when you're not a buyer. But pretend like you are. So I am so interested in your fiber property, and I've got money.
Or your quantum business.
Yeah, or quantum business. I got money in the bank account. It's dying to be, put to work, and we covet your business. What are you willing to sell for? Now, if I'm interested in your business, I'm probably going to say that too. But if I'm not interested, I'm still going to do it,
right? Because
I want to see what they're going to say.
And it's learning both sides.
Yeah,
it's both ways.
Because maybe a year from now, I really do want to buy that business, or maybe they surprise me and say, boy, if you give me, $10 and I was thinking I was going to have to pay $20, I'd be like, okay, I guess I am interested in that business.
Right.
So you constantly create kind of a truism dynamic around the interest in that case, we were we were rolling up the industry. We're looking to be a serial acquirer. I'm interested. What would it take to get a deal done? And that you learn so much from that, and they learn much too.
As a market leader, right? I'll also emphasize you were curious, right? And it's you set aside your ego, you set aside your success.
Okay, you're gonna have some debate for people listening on that one.
Well, here's the thing. Okay, you know what you know, but you don't always know what you don't know, but you're out on the search. Does somebody have a new twist? Does somebody have a new approach that you can then learn from that you can absorb into your business and make it better? But if you just think that you're the best thing since sliced bread, you're not gonna. Your learning's gonna go off a cliff, and it's quite possible you can be overtaken by the marketplace, or go stale. And so I think that's on every aspect, right? Whether you're buy side or sell side, whether you're organic or inorganic in your approach, it's about learning and being curious. And that's, I'd say during my SunTrust days, I kind of picked up on that with Wachovia, but I really tried to put it in place while I was at SunTrust.
Let's talk about you pre-SunTrust. So take us through the buildup of who you were in the years before you and I.
Do I have to put like years against this and people can date me?
You could put days, but that's going to sound far worse.
No. So
periods of time.
Yeah, I mean.
So you graduated from college in 1968. Was that what it was?
You got to open up that bottle if you're gonna. 87 from BC. Always wanted to get into investment banking. I kind of figured that out with with an internship at Kidder Peabody during school year that turns into summer. And
Kidder Peabody.
So Kidder Peabody, old line investment bank, but also had an asset management division. And my internship was with a couple of brokers, the Rowley dad and son team, Charles Bacon Rowley Jr. and the third. So shout out to Chip, Charles Bacon Rowley the third, if he's listening. But they taught me a lot, right, about just the brokerage business. But I remember one day, a couple of bankers from New York came through the office and they just looked different. They dressed different. They looked different. And I just saw them like, Chip, who are those guys? Oh, they're the investment bankers on the IPO roadshow.
How they look different and how they sound different? What was the banker vibe of that era?
They kind of had that Michael Douglas thing, of Wall Street, in that they, one of them had his hair slicked back a little bit. Had a bright tie on where all the other brokers had kind of muted ties on.
Kind of would flash their suit jackets. You could see it was a canali that they were.
I mean, probably. Although I had no idea what a canali was at that time. And but they walked with an air of confidence that was just palpable, right? And so I remember then reading. There was this like seminal Forbes article about a Salomon Brothers analyst. He was an accountant beforehand, but the life of an analyst. And I read that and that sounds like because I remember when Chip gave me the explanation about what an investment banker did versus a broker, it was a very simple analogy. It was a factory analogy. So, inputs go into a factory does whatever it does, and an output comes out, and then it's for sale. And Chip's like, those investment bankers, they take the inputs, they do the whatever, and then they bring a product out and they sell it, and we're here on the end and we're selling it. And just the way my mind worked, I'm like, well, I want to get into the whole manufacturing side. I don't want to just be the selling the product on the other side. And so I was very fortunate. Guy at Kidder, Peter Kind, who was one of the leading utility bankers on the street. Peter's still out there, senior advisor to the utility industry. Unbelievable career. But Peter said, hey, we'll take a chance on Horace. And I actually got my MBA degree at Kidder in utility corporate finance. Rate regulation was fundamentally driven by corporate finance theory. So return on capital, cost of capital, dividend discount models, discounted cash flow models, all the above. And so within my 2 years, I mean, I was a okay associate analyst. I'd run through walls. I'd do the all-nighters and all that type of thing. I wasn't the best because I wasn't a great modeler. But I just had that passion and drive. I really loved it. And I got a great education. So,
but you'll get more into it, but there's some people in those jobs are good because they're analytical skills, but where you shine is your relationship skills. So we'll bring
that took time to develop.
Yeah. We'll kind of progress that way. But when you're a banker, relationship skills matter as much, if not more than anything.
They do. I mean, they're really helpful in terms of learning, right? Getting people to open up and tell you about their business, and because I think all sorts of things I've learned, but people love to tell their story, right? How did you get into your job? Why are you successful? What's unique about what you do? I mean, if you get them talking, right, you're very likely to learn something. No matter how much of a blowhard the other person may be, you're going to learn something. Mm-hmm. And so we won't really go before college, my grandfather and father come from a whole history of being barbers. I was the first of the family to ever go to college. And so I would go, like my middle school was maybe 100 yards away from the barbershop on Main Street in Holden, Massachusetts. Horace's barbershop.
Yeah.
My grandpa and my dad.
Very cool.
And so I'd finish up my afternoon sports activity, go over to the barbershop, wait till the shop closed, and then get a ride home with my dad.
Did they have my Uncle Jimmy, who was my godfather, he was a barber too, and we go there, they have Playboy magazines that we'd get to open up.
So did not have Playboy magazines, but Newsweek, Time.
Well, that's the difference where you grew up and where I grew up.
Sports Illustrated, fishing, and hunting.
We probably had Sports Illustrated there too, but it was the Playboys.
I'm sure they had it someplace, but I just wasn't hanging out. And so I really learned how to debate with my grandfather, standing at the chair and getting his customers to talk and having that whole interesting little town, but you could be talking about presidential politics and what have you. My family, working class people, blue collar would be an attribute that was probably above and beyond.
Light blue.
Light blue. Well, not towards white, but like maybe really dark blue.
Really dark blue. That's a good point.
And Kennedy Democrats, right? But I was beginning to understand really economics, and then from college, it's like what taxes were coming out of my paycheck? What's going on here? So. Roll
so
it
you
forward.
voted for Kamala this last election? Is that what you tell us?
I'd say that the right guy ended up in office.
Right.
We can talk about that later. I think about, listen, what is at stake in today's global economy with AI and the investment that's needed? Go look at Mark Andreessen, A16Z, and why he and Ben, they go to the White House last summer, and it was not this past summer, last summer prior to the election, and they came away and like, this is a problem. Mm-hmm. And that's a very interesting read for anybody. Mm-hmm. There's a really like a 10-page interview. I forget the journalist who it's not Nick Kristof, it's somebody else from the Times. Give a really great interview of Andreessen. So I'd recommend anybody to read that.
Kendall, if you could see if you could find that, doesn't have to be right now, but I would love to see that.
Yeah, Mark Andreessen interview, probably gave it probably 5 months ago, plus or minus. So long story short, because this is a very long story, I get a great education, essentially my MBA at Kidder, as an investment banker in utility corporate finance. I ultimately go in and out of UBS over a couple of years. Wasn't really fun, but I end up at Toronto Dominion, TD Cowen, as people know it today, and that was transformational. That's where I finally found my career. I started in the workout group.
And that's roughly what year?
So I joined in 91.
So 91.
Just like we're talking recession.
Yeah.
And no, I'm sorry. Wait, I joined in 93. It was UBS at 91. 91. And I'm out of the workout team and I'm into media communications in 93. Yeah.
So and to put that time frame of perspective relative to the bandwidth journey, the first fiber companies around metro competition
94, 95-ish.
No, actually late 80s. So Teleport, Chicago Fiber Optics, that became MFS. They were 1988, 1999. Brooks was maybe 1 year after that.
Yeah. Okay.
So very much in their infancy, because it wasn't like they shot up like crazy.
No,
it was they were they had been formed and they were kind of marching along trying to figure out, is this a real business or isn't it? So 91, 92, that's behind the scenes probably, that's beginning
percolating.
To happen. And the internet's still not on anyone's vocabulary, but the internet is starting to happen. It's just happening without us knowing about it.
That's right. We were, a couple of different things were happening in the mid 90s, right? You had the wireless industry, right?
Yep.
Going from a duopoly, the A and the B, to the PCS bands were going to be sold. You had the 96 Act, right?
Mm-hmm.
You had the cable industry rebuilding their network with the HFC plant, right? So they could increase their bandwidth, right? I can't remember what presaged the 450 network or the 512 or what have you, but like that was really important, right? To distribute not only more programming, but to have that that internet product, right? The broadband product. So that was going on. We were very active in the marketplace with those two businesses. And off of the wireless, right? We were financing the affiliates, the AT&T affiliates, the Sprint affiliates, even Nextel, right? They had Nextel partners. We were doing, back in the day, as a senior secured lender, loans that were all based on debt per pop. So if somebody owned a license,
Debt per pop.
we'd give them, right. So
pop is population. So by
right.
debt per pop, Boulder is 120,000 people, so the population is 120,000.
Right.
So what you're saying is, I know wireless isn't quite prevalent yet, but we'll actually give you an amount of debt for every person who's a Boulder,
right?
For population.
Exactly, with the expectation that the penetration rates would go along like cellular had did. And even before that, right, the A and the B band, that was the incumbent telco, had the A band, and the B band was the the
lottery
competitor,
winner.
Right, the lottery winner. And so we had great relationships with folks in those days. We financed all the AT&T affiliates, and we were giving debt before they had $1 of revenue, right? They needed that money along with the equity to build out their network, which is anathema in today's world from a banking regulatory perspective. So that was really fun. I learned a lot. The 96 Act unleashed tremendous investment, right? New company formation was going like gangbusters, across all of these little ecosystems, but all essentially based upon the digital promise. I remember, I don't know if you've ever read this, but Nick Negroponte's, Being Digital book. That was another thing that got me super excited about this new world I was stepping into. And so these were those days, those formative days, understanding, leverage finance, understanding valuation, because we had a nice little M&A practice within the business. What we didn't have was an equity practice. So as we saw in the mid 90s turn into the late 90s, this huge rush to go public. And, Wall Street got all messed up with research analysts, saying one thing in private and doing another thing publicly. And so we won't name a name, but there's a certain man who was held account in some ways there. But nevertheless,
wait, why can't we say
Jack Rubman?
So did you spend any time with Jack in those days?
No, I did not. I
had a couple encounters.
We hear all the stories, right?
Yeah. No, I had a couple direct encounters, but I was mostly focused on the day-to-day business of Level 3. There were a couple times they would bring me in to meet with Jack, and it was just like, that was a weird meeting.
What axe is he grinding?
Yeah. He was mad at Jim Jim Crow at the time, so he wasn't a big fan of Level 3 because Level 3 went public without, using them as a banker.
Yeah.
So until we started giving him business, he was kind of throwing jibes at Level 3.
Research analysts.
All of a sudden, he was our biggest fan.
Right. Research analysts acting as bankers. And it didn't go the other way.
Yeah.
It was like bankers bringing in the research person as a lever, really. And so that ultimately led to some poor decisions and poor IPOs. But at TD at the time, it was very challenging to work with all these private companies up front, being the lifeblood, right, of helping them initiate their growth and build their businesses. And all of a sudden, ABC XYZ Bank comes along, takes them public,
and they make all the
money. Now all of the attention is on those bankers, right? And all of a sudden it's like, wait, we who brought you to the dance?
Yeah.
And so I got a call from a recruiter looking for somebody to run a team, and it was a promotion, right, to run a team. it was going to be moving and all that type of stuff. But it was really, I'll now have all of the products. I'll have M&A, I'll have equity, and I'll have debt. And that was going to be, important. So.
And that was with what platform?
So that was 2000. I moved to First Union.
Okay.
And so February 2000. So before ultimately this little crash that we had, the dot-com crash. Luckily, had a 2-year deal. So, you could really focus.
Because the first big wave of the crash came immediately after that, right? Wasn't that
immediately
March
after? I mean,
March or April?
Yeah, we hadn't even really hit summer, and it was already, the wheels were coming off.
Yeah. And then, 2002 is when it hit its absolute depth, but huge stress in the system, a big dip in, 2 months after you joined, and then, went way down to the depths over the next year or so.
And the way I look at it is, certainly I was a winner from the contract side, but it really gave me an opportunity to understand the organization. We didn't have really the significant problems that other organizations had, and so really get out there and market. And that is actually a repeat, because that happened the same thing when I left Wachovia, summer of 2007, and joined SunTrust February of 2008. Timing is so weird, so similar. I wish I could say I saw it coming. Exogenous forces of another ilk probably made that all happen, one reason or another. But I was able to benefit from it, nevertheless. And so that time that I was with TD, working for Gordon Paris and Ian Crow, Steve Schindler, Brian O'Reilly, really some Mike Mueller was the head of the office, and he was an amazing mentor to me. Basically, just took me aside and said, you've got the right energy, you've got the right answer, and nobody's listening to you. Mm-hmm. So you've got to figure out, I'll help you figure out how to get people to listen to you. And your approach is not to, shouldn't be to tell everybody they're an idiot, compliment them on their idea and say, have you also thought about this other thing?
Boy, someone could have given me that advice a long time ago.
I usually had a baseball bat in my hand. I'm like, you're an idiot. I'm like, okay, maybe I should put this down. Yeah. Those who know me today, they probably still think I run around with a baseball bat. I really do try to be, interactive and try to, win the hearts and minds.
So that's what you're doing. You were hitting me with a baseball bat at Frasca's.
Only when cornered. But those were times that you really learned. And, ultimately we were building a great business with First Union, became Wachovia very quickly. We got into the big LBO game with the large cap private equity sponsors. The model was changing. I was like, it's kind of funny. I brought Global Star public. First left lead deal.
Was it Jay Monroe back then?
Jay Monroe back then.
Okay.
Absolutely. Jay Monroe still running around.
Jay's going to be on this podcast at some point.
Oh, I can imagine. He absolutely has to be. And listen, look at the stock. It speaks for itself over the past
and it was
2 years.
Yeah.
Oh my God. Well, that little story. So, this was really a spectrum play from the start when spectrum was scarce. Like value. I had a great research analyst, Jennifer Fritzy.
Okay.
Who
should get Jennifer on here at some point.
You should definitely get Jennifer on. I mean, she would be awesome. So as a spectrum play with a business, right? We thought this was like a unique place, right? And it was interesting. We got JP Morgan to be our right on the IPO, which is very unique because Wachovia was not known as a left lead IPO bank. So we bring the company public, and I don't know if it was 5 months or 6 months after, we're benefiting from Katrina, right? Because the sat phones are working when the cell towers are not. So that's still a positive trend. But not more than 6 months after going public, solar flare. And it kind of zaps like something like a third of the bandwidth capacity in the network. So all of a sudden stock goes like, off a shelf, right? From, 10 to 2. And like, you're like, oh, what bad luck. And, everybody's like, bad IPO. But one of my other mentors in this business, I'm not sure Wayne thinks of this, but Wayne Perry, who was part of the Macaw Mafia.
Yes.
He's like, Horace.
Wayne's in the book because Wayne taught me at a younger portion of my career. He taught me what a real negotiator was like. And
oh my God, is he the best, right?
White Crow put me against him in a negotiation when I was barely 30 years old, and Wayne was at the peak of his game.
Oh my God, got the eyebrows and everything, looking down at you, with his stern look. But Wayne was a master. And he's like, listen, Horace, you can bring them public. And what happens after that? It's in the market's hands. You can't take responsibility for that. If you told your story and you got people to invest, you did your job. And so it was pretty freeing, right, to a degree, because ultimately you see an IPO, what do they call it? Break syndicate, break price, what have you. And it's really, you're thinking good, and then all of a sudden bad. So a big lesson. And then I'm out of the firm in 6 months. Like, I'm yesterday's news, right? New head comes in, wants his team, get rid of the old team. And I'm going, wow, I've led business for John Stanton at Western Wireless. I'm doing great stuff with Wayne Perry. I'm making inroads with Chapel at Nextel Partners. And all of a sudden I'm out on the street. So, wow, cold shower. And so looked at that as an opportunity, ultimately had an interesting set of conversations with the folks in Atlanta at SunTrust. They had they had already decided to change their business model. We kind of had the growthy equity M&A, Robinson Humphrey business over here. They had the corporate bank investment grade lending business of SunTrust over here. I'm going to put them together and be that universal one-stop shop investment bank, which I'm like, oh, this will be fun, right? I can do this. And so that was early 2008. Of course, we ended up having to write off 2008, like everybody did.
Seems like every time you go somewhere, there's a big market crash. You sure you're not the one causing that?
Yeah, I didn't have a 2-year contract at that point, though, unfortunately. Or I did have a 2-year contract, and it was a very, very, very modest compensation. So, but again, while the rest of the street was like trying to fix their problems, we could go out and really talk to the marketplace. And that led to 2009 and 10, where here we were talking about that again. So in that time frame is when we started to meet. Do you recall? Do you know why? Do you know why?
No.
So I'm in Boston making the rounds, and I sit down with Jim Wade, who I've always respected, and Gillis and Brian were both in the meeting too. And very uniquely, they were putting out at that time.
This is MC Ventures.
MC Ventures, right? They were putting out the 10 themes for the year. So, listen, I'm starting up a new job. I'm looking for all of the guidance and insight I can get. And they're like, there's a coming new business model with fiber. And they're like, Jim's like, you got to go out to Colorado, meet Dan. I'm like, I'm in. I'll go out to Colorado. And so it was really upon their urging. And listen, we did business together for 14 years and quite successfully. But that was all the credit has to go to the guys at MC.
Nice. Yeah, they were great partners. And Gillis was one of the earlier people from the Bandwidth Journey who's been on the podcast. Gillis was, I think he was involved when we were at ICG. Yeah, he was. Peter Claudius, I'm sure you probably remember
right,
Peter. Yeah. Peter was the lead for MC on ICG, so that's when my relationship with MC really got going. And then they were they alongside Columbia were really our two lead investors, our two main investors.
Jim and John. Yep.
Everyone else was pretty much along for the ride until Charlesbank then joined.
Right. And then listen, I'll give you another prop on that same theme of bringing in investors. I remember, so getting back to Metro Connect, I got a big pocketbook. You were also out there looking for another round of equity because everybody, it seemed, was kind of tapped out. Mm-hmm. And I sat down with you multiple times about what you were looking for. And it was like you were looking for the unicorn deal. That's how I would describe it. You wanted this. And I'm like, Dan, you got to give them one of these. I don't think, how can you get 3? And at that time, we were developing our relationship. At the same time, this is all going on with Phil Canfield.
Okay.
We were advising them on getting into the cable business. And right at the same time, I'm like, well, outside of the cable business, there's this great business you should meet, a great guy. So I'm not going to take credit, but because I never asked him for like some sort of prop, but it wasn't after that too long that you told me that GTCR was interested. And so Phil was a great partner to us, Stephen Jeschke as well. So we were always super honored and pleased to work with them. But he was your guy. He ended up being your guy, and you levered that investment to do AboveNet.
Well, when we talked about the wallet drop, what had happened, because the hard part was the triple bank shot was my Series A and Series B investors were wanting to get a big win under their belt. So they were probably
pressure.
Yeah, they're probably 6 times in the money at that point,
Right.
Relatively new investment. They'd be heroes if we got an exit at that valuation. So they were not wanting me to go bring in another investor.
Right.
I'm like, well, I'm not ready to go public and I'm not ready to sell this out. So we got a problem. And so, they came up with a set of criteria that they're like, if you do this, we'll bring on another investor. But it was like almost undoable. I'm like, okay. And then Phil, to his credit, was able to see through kind of a path where, hey, as long as we tweak this and tweak that, I think we could do it on our end and they could do it on their end, and there could be a win-win here. Well, we only worked that out in February when maybe 2 weeks, maybe a week before MetroConnect. And then as soon as we worked that out, it was a handshake deal. There was nothing in writing other than term sheets, but it was a handshake deal to go hunting.
Yeah.
And so then we said, well, what do you want to go buy? I'm like, what do you want to go buy? You tell me first. AboveNet. Well, that's what I was going to say. So unbeknownst to us, AboveNet was all but sold at that point in time. And yet now I had the money and
Who was the buyer?
The buyer was Providence, led take private. And they were done with the deal. They were routing for signature when we plopped our offer down in front of them and just froze everything.
So at the time, I was also calling on Alex Evans.
Okay.
And it was interesting, right? We worked with, and I had known Jonathan for forever, and Paul and Glenn, back to my TD days. In fact, one of the first deals I ever really got my private equity experience on is I'm negotiating the leverage finance underwriting with Jonathan Nelson for Wireless One out of Naples, Florida. And Jonathan's like coming at me with why this, why that, and you don't need that, and ended up working out okay for us and for them. So always big fans of Providence. But yeah, we were supporting Alex in the bid as well, and we supported you in the bid. You
were supporting Alex in the bid for AboveNet?
Oh yeah, yep. But it was very interesting. I mean, $1 billion, double digit, and negative free cash flow and it was too tough for them. At the end of the day, they were, once the price got to another level when you guys entered, they really lost conviction, as far as I could tell. I mean, we weren't advising them. They were just asking us for financing terms.
So when I researched the book, I had to go back and really look at what was happening, including the numbers, and then I bring that out in the book. Like, here's what was happening. They were trading publicly for maybe 7 times EBITDA, so considered overpriced. They were growing revenue in double digits. They weren't negative cash flow. They were positive cash flow, building out a bunch of network. I mean, what's there not to like in that business? It's growing at a fast clip. It's got a really strong EBITDA margin, incredible assets, and
it's the story of
cash flow. But people couldn't see, like, man, I could buy this thing for 10x and I'll be at 7x just by holding it a year or two.
Right.
And if I hold it for 2 years, it's going to be at 6x or 5x.
Right. But to support their bid, they wanted higher leverage, right? Which then dropped down the cash flow. And they, as we saw over time, they were very sensitive to that free cash flow line item. They definitely always had a discipline. Alex, Mike Angelakis, I think was still around at that time before we went to Comcast. And that discipline really was a limiting factor.
I don't know if I'd call it discipline, because I think we upped them at first by $1 a share. So it was $79 versus $80 a share. So it was probably 1% on an enterprise value level. And the problem is they didn't think there was another bid, so they tried to call the bluff, and this I owe to Phil, because AboveNet didn't want to sell to us no matter how much higher our bid was.
Right.
They wanted to stay with it and do a take private, so they weren't being transparent with us what was happening. They were setting traps that if we took a misstep, they could just sign the other deal. At one point, they said, "We need your best and final." We're like, "What are we talking about? We just gave you a higher price yesterday, and you didn't even respond. Now you want a higher price again?" So I said, "I'm not negotiating against ourselves. Why would I give a higher bid when they haven't responded to the other one?" And it feels like something has me thinking here that if we don't increase our bid, we're giving them the permission to sign with someone else.
You give them a quarter?
Yeah. No, that's getting back to our other story. No, in this case, we agreed to come back and really clear the decks. I think we went up maybe $3.
Oh, wow.
Which is still minor in overall enterprise value scheme of things.
Right. Yeah, they had small float.
Yeah, and then they came back and said, "How about $1 more than that?" So the delta between our bid and their bid was completely negligible.
Right.
I mean, negligible by so much in overall scheme of things. But it was Providence not believing. They thought they were being played with.
But you gave the AboveNet board what they needed to say, okay.
Yeah, to say we can't. And Bill has shared this story too. The board just said, "Bill, we just can't. We can't accept a bid. We're a public company. We can't accept a lower bid. So unless you get them to outbid, or unless you get there to be, some other kind of meaningful difference in the quality of the bids, we kind of have to go with the highest bid." And that's how we want it. So,
and that
better
really,
be lucky than good in that case.
Yeah, no, that continued on, right? I mean, that was I'd say a seminal deal in terms of valuation. Of course, deals ended up going even higher.
Yeah, a lot higher.
in the resulting years.
Well, that value, we bought AboveNet for
nothing compared to
9 times, maybe 10 times. I mean, it went up from AboveNet on a standalone basis. If they waited 3 more years, would have been what, 15, 16 times?
Easily.
With the quality of those assets?
Because we ended up hitting those marks, right? 16, 17 times.
Yeah, with less quality assets.
Right. So, pretty fun time.
Yeah, no, it was crazy times. Great. But then, the way I tell the story, at least, and I think this is an accurate rendition, is once we went public, we kind of, we would show our numbers, during the public debt days. And, I was very transparent and, got a lot of criticism for giving too much data out. But the big reason I did that is because of what we were doing was complex financially, and we would get penalized if we weren't transparent. If we were opaque, people would assume the worst. So I wanted to show all the metrics and explain how the business
You got criticized nevertheless.
Yeah, I got criticized nevertheless. But when we went public and people were able to really validate that, like, okay, they were able to do the simple math of, did Columbia and MC and Charlesbank and GTR really only put in this much money, and now that's worth 7 times the amount in this shorter period of time? How did they go up 7x in 6 years? And so now the motivation for private equity investors, for other rivals, for Crown Castle to say, now we see what they're doing, we want where that came from.
Right.
That's what all of a sudden the rivalry for deals changed materially.
It did. And, for many of those, it came home to roost in a negative way, as we just saw.
As we just saw. And what Horace is referring to there is Crown Castle, who outbid us on a number of deals we wanted badly.
Absolutely.
We were in a game badly, but we were getting outbid. We got outbid. And I didn't know whether we won by losing the bids or lost by losing the bids. You just don't know at the time always. But I was, participating at bids at uncomfortable levels. I do know that. These weren't like, boy, we should have bid higher. I'm not even sure if we would have won that deal at that price, we'd have been better off.
Well, because up through AboveNet, and maybe just beyond that, I always thought of your discipline in terms of, it didn't really matter what multiple you bought.
Yeah.
Where was your synergized multiple?
Exactly.
Right. And at a 6, 7, 8 times level, you thought you were adding shareholder value.
Yes.
Obviously more towards the former than the latter. So that was what we were, really thinking about in terms of what any business was worth, right? If we know that you as a successful company had that as a basis. I don't think, and this is probably the bigger problem, right? When you get out of that your comfort area when a tower company is going to go buy a fiber company, different sales points, or when a data center company, a telco wants to go buy a data center company, different sales cycles, different capital allocation, et cetera. It's hard to balance those.
Yeah,
right?
In the case of the Crown Castle, you also had the situation where Crown Castle's top customers are Verizon's and AT&T's. So now they just bought a fiber business, and now they're going to Verizon, AT&T say, "Hey, rent space on my towers." Like, well, you just bought a business to compete with us. Maybe we'll give our business to someone else. That had to be a dynamic.
You're not Switzerland anymore.
Yeah, and then the other dynamic is then your Crown Castle, when you walk into Goldman Sachs and say, "I want to do this fancy fiber bandwidth network for you, connect up your sites." Like, yeah, but you're a tower company. So they, from a go-to-market standpoint, and I didn't even fully realize at the time. If I did, I would have been like shouting off a rooftop, and it probably would have saved them a lot of money because they probably wouldn't have gotten the deals. Then saying, the Crown Castle is not going to be successful because as a tower company, the main customers they need to sell to aren't going to want to buy from them because they're a tower company.
Yeah.
I got to believe that was a big factor in their. And the reason we say they struggled, and this is in public, so we're not kind of just giving opinions. They ended up building up a basis in their fiber business, meaning the amount that they invested in total, it got up to like 18 times. So the amount that they bought the companies for, and then the negative cash flow that they
increasing the
generated, and the decrease probably in the EBITDA meant they'd have to get 17 or 18 times EBITDA to just break even after 6, 7, 8 years.
Yeah.
And instead, of course, they didn't get 17, 18 times. They got, let's just say, a whole lot less than that.
A whole lot less.
A lot less than 10x.
Yeah.
So,
single digits.
Yeah. So they had to eat the difference between those two numbers, which was, a lot of money. Now,
activist driven too.
Activist driven, and hopefully the big beneficiary is none other than Zayo, because Zayo ended up being the buyer of those assets at, on an EBITDA multiple basis, at a really good price, and at what assets they're getting at a really good price. But Zayo's got work to do, because Zayo's also, bought a company that, didn't have momentum, and they got to rejuice the momentum.
I don't sit on that side of the house at DigitalBridge, yet, John Frizzell leading that team, longtime investor in the space. Of course, Steve riding the helm of the organization. I think they've got a great acquisition. It's hard to even, I'm going to be completely arm's length, maybe 3 arms length away from this. It would be impossible for me to think that you could do that transaction and not come out a winner, just from the pure math of it. Very attractive. So I think that they'll have a great shot.
Yeah, no, I do too. And, I do think, they got to execute. They got to execute, because
no doubt about it.
You still have to detangle that from what was Crown, bring it into what is Zayo, and there are complications there. And I think the new Zayo is in hopefully a strong enough position that they'll know how to fully absorb that. I'm a big investor in Zayo, so I certainly hope they're able to. Okay, so before we move on to your current.
We may have to do a 2-part episode.
Oh, hey, listen, there's some that we have even.
We had that dinner in DC. We spoke all night about what's going on today.
No, we'll do it again, but we'll go deeper in some of these. But before we leave kind of this whole era,
sure,
pick a couple other deals that, weren't Zayo deals, but deals that you were involved with that were just memorable, fun, learning experiences. When you're telling stories about the deals that you were involved with in the 2010s.
Yeah. Obviously I'll give another shout out to the RCN go private, splitting the companies, working with the 2 management teams, Abry at that time, incredible investor backing a vision. That was super fun.
No, I want a deal story though, like a deal dynamic story, like a,
Well, listen, that was the same type of go private perspective. Fiber was very much unknown. Cable, as we said, I'd known.
And we were working with them on, both on the front end, working with Abry, potentially doing that together. Do you recall that?
I do. Listen, I was advising Jay. It was really, this was Jay's deal. Jay's conversation singularly with the board. Really, maneuvering it quite well. had an interim management team at the time. And so it was ripe for being picked off.
Yeah, no, and what we contemplated, driven by Abry, was buying the RCN together, and then them splitting the cable company from it.
Right.
And I was like, I was interested, but I was also like, okay, there's a lot of moving parts on this one.
Well, yeah, as we found out later on when we were selling Sedera a couple of years later, and there might have been a fateful conversation between you and Jim Hollanda that kind of put that one sideways.
Remind me, because that one we were kind of in the middle on that one too.
So I mean, deal dynamic, right? Where we had a thesis on how much the business should be worth, how to allocate capital, et cetera. We talked about how we tweaked that around a little bit once we separated the companies. Seminal transaction for us, right, in terms of both the buyout and working with Abry on a leadership basis.
Us meaning SunTrust.
Right.
And your
so
platform.
Now it's about execution, right? And the cable business, Jay recruited the Patriot team to run. So this is Steve Simmons and Jim Hollanda. And they were ready to go at it, right? And they were really longstanding block and tackle cable operators. I know cable has a bad word today, but back in those days, they were the feisty competitor going against the utility of the telco. So they were doing great. Unfortunately, on the Sedera side, a year and a half in, they were getting more churn than they expected. So they were doing great on the ad side. And there was that time period, Mike Sicoli would say, between nailing the deal and actually closing it, he's going from CFO to CEO of Sedera. The fiber team just wasn't as forceful maybe as they should have been and incented. But the fiber business did not get off to a great start. When he put in a plan, they started adding business, but it was really running in place. They couldn't get out of the churn. And
they did have a lot of base that was very susceptible to churn.
Yes.
Not like a lot of what we call an Allstream or Integra had a similar dynamic as that.
Yeah, and it was unfortunate. So in a real surprise, and again, I can't remember exactly what year this was. Maybe it was 12 or 13. I'm at Metro Connect, and Blake says, "Hey, listen, I'd like you to try to sell Sedera." And I'm like, "What?" I'm like, "I'm happy to." We worked together with James Henry on the assignment from Bank Street. And there was still momentum. We could really, maybe just slightly pivot the company to look in its best light without necessarily we're not fooling anybody. But we were in a diligence session, with the company and Bank Street, and all of a sudden we got this call, and. And I think James took it from you, and you're like, you had just met with the Patriot team, and you're like, well, listen, we'd love it if we got more of the fiber, and we'll lease it back to you. And Jim's like, no, I got the fiber. I want the fiber. I'm in these metro areas. I need a network to control, and I'm not gonna be beholden to you as an owner. And I think, as the story goes, you took it one step further. So, well, why do you need the fiber? You're going to compete on the commercial and enterprise level with me? And Jim, I think, said, well, maybe. I mean, I'm going to hold the right. And you're like, click. And we got the call, like, they're out. I'm like, so I called Ken, I called you. I'm like, wait, let's, figure this out. I'm not sure, this is really Abry's perspective. And, but that was it. You were done. You just didn't want to hear it.
Well, for good reason. Well, I doubt I just hung up on him, although
No, you didn't hang up and said, we're out, type of thing.
That's for certain, and for good reason. I mean, there would have been no reason for us to want to do that deal under that circumstance. Not saying they should have wanted to do a deal with us, but that would have been a really bad thing for us to try to do. That
Yeah,
would come
I
back and
mean,
haunt
listen,
us.
it was one, and maybe just for everybody, RCN, right? Tradition. Well, this is backed originally by Paul Allen. Going to be overbuilder, right, of the cable guys and the telco guys in
Well, it was
major.
originally backed by Kiewit before Paul Allen. That
Right.
was
Okay. You're even
that
going
was
further.
McCourt. That was, and I was actually there when the intellectual formation of that took place, because it was back in the MFS days. Crow bought the Boston Fiber Network from, what was McCourt's first name?
Frank McCourt?
I think it's maybe his son.
Okay.
But he'd always dress in like really fancy suits and slick back hair, and he's running like some small fiber company. But he had the idea he was going to be the MFS of kind of triple play residential. So we were going to go build competitive fiber networks, and we were going to, offer cable service and voice service, and we're going to overbuild against the traditionals. And then that led him to buy this company called CTEC or something like that, and then he rebranded at RCN. So that was the prehistory of what became RCN.
Got it.
And then they went bankrupt.
another little history lesson.
Yes.
So
Bob McCourt, I think it was.
Okay. So you had one company running essentially two business lines, right? The residential broadband business, and you had the commercial enterprise fiber business, but really over the same backbone, largely. And so there are very few places where, you would have a residential opportunity, but not have the commercial opportunity, right? We're not necessarily talking about mom and pop pizza shops, but obviously.
But the original RCN was thought to be going after, mom and pop pizza shops. Like, we're going to, have a product that when we pass by small businesses, we're going to give them a video feed, so that they show it at their Pizza Hut or whatever. So
right.
That was part of the early concept of the company.
Exactly. So separating these businesses, we literally had to account for the strands that would go for each one. And that was great in concept. And then, from a buyer's perspective, you were, a little bit more sensitive. You don't need all that bandwidth for your cable business. Why don't you give more to me? I think was the fundamental challenge.
They wanted to do it one way, and that's fine. They owned it, but we weren't going to be the buyers of the property that had fiber strands on their fiber network. That's just not what we wanted to do.
All right. So fundamentally, we had a hung deal. And
by the way, let's just do a time check, because I know you have a hard stop, and I think we're getting close to it. What time is your hard stop?
Right around now.
All right. Well, we're going to have a whole nother one of these and have a lot of fun. So we could wrap up immediately. We could do another 10 minutes. It's really your time schedule. You want to complete this story? And then
let's wrap it up really quick. I didn't even know. Wow, we went through just a fraction of what I thought we could hit. What a pleasure.
Do this again.
Hung deal. Anyways, Abry later on, a year and a quarter later, ends up doing another transaction, smushing it together, bringing in Berkshire, again, to catalyze it and make it all happen. But it taught me a number of different lessons in terms of, the complexity, right? And that operational detail and what was really going to, win the day for a buyer. Whereas, up until that point, I probably always leaned towards the financial deal making and the industrial logic from a financing perspective. And yet, that really on the ground operational aspect, it sounds so stupid coming out of my mouth now, was so critical, right? Because if you don't have that foundation, what do you have?
Yeah, well, it's a mistake that's made over and over again in the industry by operators, not just by, from a financial lens. And in fact, I just had this conversation this week with, my old friends at Zayo. They were asking some questions about some stuff. And if you think you might want to sell a piece of a business that is intertwined with your other business, what I've always done, and what I've insisted other people do, and most of them have not, is you have to separate the businesses while you own both sides.
Right.
And by separate them, I really mean separate. It's like exactly what assets belong here, what assets belong there. What the customer contract, who owns the customer contract, and if you're using the other customer contract, you have to set up some kind of relationship. It could be a resale relationship, it could be an agent relationship, but everything it takes for those businesses to operate separately, you got to do it, and then you got to own it for another year or two. you don't do that, you're going to be selling it at a big discount.
Well, I'm beyond fingers on my hands with the number of carve-outs that have absolutely failed.
They're hard.
And big deals. Very sophisticated buyers. Even, obviously when you get into the 5 have failed and the 6th guy still tries it, or the 7th guy still tries it, or the 11th guy, it's really amazing. And I can only think of, 1 or 2 that have been successful in that true carve out.
Well, we've done it multiple times. Envoy was a huge success for us.
I'm talking about a little bit of a bigger scale.
Yeah, it's harder the more scale you get, but the formula, the approach. Well, we got to get you on the road, but
yes.
Give us 2 minutes on what you're doing now.
So it's exciting these days. I've left banking and I'm working with Mark Gansey and Ben Jenkins, Dean Criaris, Chris Moon, and I'm at DigitalBridge on the private credit side as an investor. There are any number of great things about it. The real shorthand is that, we invest senior secured, we can do holdco, in some instances do preferred. And we don't have a banking regulator looking over our shoulder. We don't have an institutional investor mindset that's beholden to the rating agencies. We look for great companies with great business models and great management teams who are looking for capital to grow. And in this day and age, because DigitalBridge, of course, just does digital infrastructure, we've got a whole ecosystem of experts, right? Portfolio companies, investors on the public equity side, on the private equity side, on the private credit side. This is all we do. Live, eat, and sleep digital infrastructure. And at this time, whether it's looking at it over the past 6 months, or the next 6 months, or the next 6 years, or the next 10 years, we are in an environment, I'd say, that's even more exciting than, say, 1996.
Sure.
Because of the innovation that's going on, the business models. I wouldn't say exactly new company formation.
Although there's definitely some of that.
There is. It's just 96 was just off the charts, right?
But that's because you guys aren't looking in the right places, by the way. So here's what we'll talk about next time, or we can talk about it offline. But there's 2 categories of infrastructure that are in the early stages of exploding in a positive way, exploding in the opportunistic sense that lend themselves to infrastructure lending mentality. That wouldn't have been the case 2 years ago, but it's on a huge curve. And one is quantum.
Yep.
And you can already see that. There's already public companies trading north of $10 billion in the quantum realm. And the second is space. And both of those, if you think about them looking backwards, you say, nope, that's not it.
I'll add a third, robotics.
Robotics. So those 3 categories, all of which are going to be juiced up by AI, all have kind of the formation of infrastructure elements of plan that, that they're getting past the pure equity stage into getting ready for kind of creative lenders. So and we've got multiple of them in our portfolio.
It's not lost on us. I'd add that the high performance compute sector is certainly more than gaining its stride. And I'm speaking to not just CoreWeave, but those like CoreWeave, whether they public or private. When they have the experience of sourcing power and the experience of dealing with technology and the latest GPUs, really gives them a seat at the table.
Yeah, a podcast I dropped on here a couple weeks ago. Eric Ginn, are you familiar?
Oh yeah,
Aaron, Aaron Ginn. Yeah, that's definitely in that category.
Yeah, from Riot.
No.
No. He's Hydros. Right.
Yeah. So
right. I know her. Yeah.
So hey, we gotta get you to the airport.
Yes.
Right. So you're on your way
Dan,
out.
it's my pleasure. Thank you, team.
It is, and we got so much more.
We got more to talk about. We do have to have a version 2. I'd be more than happy to come back.
Good. All right.
Good to see you,
buddy.
Horace. My pleasure.
All right.
Thank you for listening to this episode of The Bear Roars. If you enjoyed the episode, please like and subscribe on your listening platform. This podcast was produced by Loud Bear Productions and edited by Kendall Weinberg with support from Gibson Siegert.